the altcoins to rally, and most of them have turned green. You can see the whole crypto bubbles chart over here is exploding towards the upside. There was a pullback from Bitcoin and Ethereum as well. We'll cover those important levels and outline whether that is cause for concern and what you can expect going into the weekend price action. So without further ado, let's get straight into the charts. And I want to start off with the elephant in the room, which is of course that 200 weekly moving average, and we are yet to clear that. You can see we pierced directly into it, temporarily broke above, and then a strong rejection from that area, and that does happen to line up as well with all these areas of resistance. So you can see very, very clean and clear level over there. Let's make it nice and big. You have the touch point from the breakdown, which happened in May, and then you have the previous attempted break of that level in August, which was a swing failure pattern, and we came down, and now we have a similar picture. So as was outlined on yesterday's show, if you do start to see a major rejection from this level and you start to take out the lows, the previous at least higher low, then this picture can very, very quickly turn ugly. But we're not yet at that phase. For now, it's still a relatively normal and expected pullback. I'm going to give you the levels to watch on the low time frames. Just stay tuned and wait till the very, very end. As for the key level targets that we had over here, so that is a loss of the key yearly high, and it means that you're breaking back into the range, which is also still fine as long as you still hold this as a higher low, this region over here, which is at about 21,600. Any closes that come below that level, of course, could become quite catastrophic, and it means that you have to start bringing those low targets back into play, but we're not yet at that zone. So there it is, rejection. You have the 21 exponential moving average, the yellow one, which is currently crawling up. That's a good thing. If price can just hold these levels for a couple more weeks, you'll have the 200 moving average, which will continue to downtrend. And then you will also have the 21, which is continuing back up. And that would actually be my expectation. I would not be surprised to see something like this, to see price kind of get into a tight wedge pattern like that with a massive resolution that's going to come in a couple of weeks or months time. So that would be my expectation if you just want my hunch on the market and what I'm seeing. And one of the reasons for the pullback is because the Fed futures are now showing that there's a 15% chance of a 50 basis point rate hike, which is in March. That's up 1% from 2 weeks ago. So how quickly things can change in this market. It's highly volatile at the moment. And you got to really have your finger on the pulse of the market and pay hyper attention to everything that's going on, because at a moment it can flip like this when tensions are high. And as one of my old friends, 𝗕𝗬𝗕𝗪𝗧, says, he calls it the liminal space. That's when the psychology of the market is at its most pivotal point, where it could flip bullish or bearish at any moment. That's when you want to pay the most attention. So he says, yeah, just 2 weeks ago, the debate was whether the Fed would raise rates at all after March, meaning that we're going to pivot or pause completely. And now the base case shows that at least 75 basis point in rate hikes by June. Absolutely insane volatility. And it's insane volatility. And chart wise, you can use that VIX, the volatility index for the S&P 500, as a marker or indicator for that volatility. If you want a visual representation, this is what you'd look at. And anytime that we've been within this box over here, we don't typically spend a long period of time in this area. Here we've consolidated for longer than we have in the previous year. And you had a big spike up yesterday, which correlated to a sell-off in the stock market. Remember, an increasing VIX, generally speaking, is going to be a decreasing stock market, which is a decline for all risk on assets. So that was essentially what happened over there. DB over here showed that the US close on the S&P 500 yesterday was negative 1.35%, which is why Bitcoin obviously moves at a higher amplitude, meaning that you had about a 5-6% sell-off on Bitcoin. But altcoins, of course, were popping because Bitcoin dominance was going down. Nasdaq, negative 1.75%, and the Dow Jones, negative 1.25%. So I'll give you the key levels. This is kind of what I'm watching on a very low time frame. Now I'm on the 4-hour chart, and I really want to see this region hold. You firstly, if you use a tight trend line, this is not the main trend line. I just put a tight one in, but you're showing a shift in momentum. I would now want to see this higher low defended. So this higher low, I'm going to mark it off with a little horizontal. Let's grab the magnet over there. So I want to see this region over here. Let's make it red, because red is dead. If you go under that, you're dead. Not really, but this is an important zone to watch over here. Is the higher low at 40.60. If you break that higher low at 40.60, then you're going to return back to the mid-range as well as the main trend line. It will make sense to you now. I'm going to zoom out to give you a little bit better perspective. So daily chart. All right, that's what we're looking at. Daily chart. As you can see, you lose the red line. You're coming all the way back down to the mid-range, which is at 39.92. Now, that is super, super, super pivotal for the stock market because it's also your momentum trend line and it's the mid-range. It's important that price holds that and bounces off that. That's if you're bullish, that's important. If you're bearish, you want to see it nuke straight through this thing and come all the way down to range low. But in line with the trend, very, very simply put, which way is the trend? It's up, right? You have the lows, you have a high high, you have a higher low, you have a higher high, and now you're looking to set your next higher low properly. It looked like it was going to be this one over here, but maybe not. Maybe we're going to break through and set the main high low at 39.84. So keep an eye on that. If you do want exposure, by the way, to trading the stock market, not just stock market, stocks, indices, commodities, crypto, I use PrimeXBT. I am currently using a copy trader to kind of like hedge my bets and outside of crypto. I'm testing him out over the next couple of months, as I've mentioned to you guys before. So I've only given him $1,000 of equity. So far, this guy's doing okay. If he does well for the next like few weeks, I'll start to increase that. Start off initially with only like $300, built it to $1,000. Eventually, I'll give him $3,000, $4,000, $5,000. So PrimeXBT, there is a link in the description below. Should you want to check that out, use the sign-up bonus. There is a sign-up bonus over here. You need to type in the promo code Kyledoops. Otherwise, you're not going to get the sign-up bonus. All right, Bitcoin dominance. Here it is, Bitcoin dominance. You can see clear rejection from that top level over here at exactly 44.74. This was looking like it was going to be a mega breakout yesterday. I had this trend line up here, and I said, well, if you start to see a candle that pushes through this trend line, Bitcoin is probably going to break out against the altcoin pairs. But then you had a sudden change of events at the mid-range, which we've had marked out for a very long period of time. You had a rejection from that area, and currently it's coming down, which is why altcoins are rallying. It's quite interesting, actually, when you see such a small sell-off. That's not an enormous sell-off on Bitcoin dominance. That's only not even 1%. It's 0.93% sell-off, and yet you have such a massive move within the altcoin market. I'm seeing everything rallying hard. So if this can start to come down towards that pink box zone, but Bitcoin holds up, very important. Bitcoin would need to hold up and at least consolidate sideways whilst Bitcoin dominance drops. That could spark a major altcoin rally, of which I would definitely want to participate in. And we'll have to find some coins that are fitting the narrative, because remember, these coins are very narrative driven. At the moment, we're kind of like in this eco bubble or eco rally where the liquidity is just moving from coin to coin. The market cap is not really necessarily increasing with new money that's coming into crypto yet. So all the little rallies, you kind of want to participate on that little up run and take your profits while you can and bank them, wait for the next one and the next setup. So keep an eye out on that. That's what I'm watching over here on the Bitcoin dominance. And then also, let me know, have you heard about the ordinals in the let me know in the comment section below. Have you guys heard of the ordinals? According to Delphi Digital, there's now more than 120,000 Bitcoin ordinals that have been inscribed. For those of you who have never heard of this and it's new to your ears, ordinals is essentially Bitcoin's NFTs. So like you have NFTs on Ethereum, the Bitcoin OGs were like, hey, we want our own NFTs. We're going to have Bitcoin ordinals. And the only question that I have is, when celebs come into the ordinal sector, is that a possibility that it could be a top? Because you have Paris Hilton who dropped 1.62 BTC on an ordinal. Is that a top signal? Please let me know in the comments if you're familiar with the ordinals. Is that an ordinal top signal? Because I think last time that she was bullish with Floyd Mayweather, that marked 69K exact for the market. So I hope not. Please, Paris, if you're watching this, do not wreck us. All right, let's move on to total. Total 3. This is for the altcoin market, of course. This is currently in a very, very strong downtrend still. You can't deny it. Don't be a hater. Don't deny it. If Bitcoin dominance continues to drop, it has a chance of breaking above this region. But for the time being, yes, this is dangerous to play the altcoins because you need to treat it, as I just mentioned, as a opportunity for short-term trade. You take your profits and you run into the next one. Consider yourself lucky if you're making money on altcoins because it is lower high after lower high after lower high, and we're still stuck within a range. You need to break out of this zone at least above this lower high region, which means that the altcoin total 3 market cap, so total 3 market cap is for the altcoins, it needs to start to close at least, I don't even want to say a tick above. I don't want to call it 415 billion. I want to see a convincing close around maybe 425 billion. So if you can see it get above here, somewhere around this 425, 430 billion, and then retest this range high as support to give a convincing breakout towards the upside, then altcoins will really, really start to get rallying. And this is a very, very common question, by the way, amongst investors and traders alike. They sit around the dinner table and they chat about what is the best things to do, sir? Is it concentrated investing, meaning you hyper focus on 1 or 2 different stocks, or should you be hyper diversified? So diversified amongst 10, 20, 30, 100 different stocks, cryptos, whatever it is that you're trading. This is my answer to that question. Let me know also in the comments below. Please let me know, are you a concentrated type of investor or are you highly diversified? My answer to that question is it's going to be very dependent on your time horizon. So firstly, how long are you planning on buying and holding for? Secondly, what is your risk profile? So for someone like me, I'm in my early 30s. Factually, I don't have any children. I don't have any kids. I don't have a family that I have to look after. And therefore, I can be super aggressive in the market. I still believe that being concentrated is best in the beginning of a bull market as well as at the end of the bull market. So use this analogy as an example. Just imagine if you have the start is kind of like a tight line over here. You want to be concentrated going into the market in the beginning. And then as the market expands, so let's say you have the beginning and the middle phase is when you're in a roaring bull market, and then you have the end phase, which is going to be a blow off top. In the beginning phase, you want to be hyper-focused into 1 or 2 different coins. So let's say Bitcoin and Ethereum. Then as the market enters a bull run, you want to start diversifying out, maybe have up to 10 different altcoins, maybe 15 at the most, because you want to keep track of those altcoins. How do you manage the risk on so many different things? And then as you start to see signs and symptoms of a market cycle topping out, you then want to again go concentrated back in. And the reason why is because you want to be able to cut positions quick. The beginning and the end of a market cycle are the most important time frames in order to be able to get in and out of the market quickly. So if this is the start of a new cycle, then you want to be concentrated. That's why I'm currently only in Bitcoin and Ethereum, other than my HODL position. My HODL position, or my dollar cost average portfolio, is going into multiple altcoins because my time horizon is high. And this is also going to vary depending on how old you are. If you, sir, are maybe, or ma'am, if you are 65 and you have 3 kids who need to go to university and you have to pay for that and look after a family, pay a mortgage, pay for your cars, maybe you have a boat and a holiday house, congratulations, then you probably don't want to go all in on crypto. You want to take a smaller percentage allocation, but still follow the same sequence or principle, meaning concentrated first, diversify out into the middle of the bull market on your trading portfolio, and then again towards the end, concentrated. And there's different signs and symptoms which I will address on a future stream. But for example, I really hope he's not watching this because he's definitely going to walk over to the office and give me a backhand. But somebody in our office yesterday came in with a cake. I'm not going to mention who it is. He came in with a cake celebrating the start of the bull run. And I don't know, guys, that is a potential sign, which is why yesterday I outlined on this tweet, said I'm not looking for this or booking it or calling this, but I'm just outlining the potential downside risk, because if it played out, it would look something like this. And I was looking at the range of Bitcoin over here. Please do yourself a favor, go to this tweet and read the hate in those comments. I gave the higher low call, the next higher low at 21.5, almost to perfection. And then this is what I get in return when I say that, guys, I think it's going to pull back. And what happened? There we are. Exactly that happened. I'm not one of those guys that say exactly as predicted, but there it is. I'm just showing what happened. So moving on to Bitcoin price, what are the levels? Okay. Key monthly levels over here at 23,954. We failed that. We deviated below. So is this a failed breakout? It could possibly be a failed breakout, or it could just be another series of retesting the bulls. There are key levels that you need to outline on your charts where you want to see that hold. Ultimately, your final line in the sand as a bull is you definitely, and I told you this yesterday, you definitely do not want to see prices come back below this area over here, which is your 200 exponential moving average on the daily. It's the light blue line. It also matches up with that 21,000, I think it's $394, 21,394. Price should not come back down that far. I don't even want to actually see it come anywhere below 22,900, which is these moving averages over here. I'm going to show you on the low time frames how that coincides. But if you put this on a line chart, you can see key monthly level rejection back into the range. This area is where I want to kind of see this flipped into support. If this can consolidate in between the key monthly level and this rounded up $23,000 zone. So if you start to see a nice consolidation around this area, then I think it will still ultimately lead to a proper breakout. Remember, you grind against resistance. Someone actually highlighted a tweet that I gave way back. I told you guys, on Twitter at least, price is grinding against $18,000 resistance. I'm flipping long, because when you grind against resistance, it actually leads to a breakout. It's contrary to popular belief. People think, oh no, you can't get above that resistance. Look, it just refuses. But no, if you're grinding against resistance, it's going to lead to an even bigger breakout. And that's how those bull flags form, right? You have a big up move creating the pole, and then you consolidate and you grind and you grind and you grind and you grind, and then boom, it always leads to the next big breakout. So do keep that in mind. I don't want to see price go below here. That's basically what I'm saying. If I see price go anywhere below that 23,000 already, I'm going to start to get worried that this is going to be full on distribution back into the range, which means you're going to lower prices. And where are those lower prices? Well, the first area of interest is going to be the stops. The stops, I'm looking at the 4-hour chart on Bitcoin now. So you can see the range, very, very clearly defined, easy to see range. You have the range highs, straight rejection from there. Then you have your mid-range level, but underneath that level is going to be a lot of stops, which means a lot of liquidity. And you know that the market or the price tends to gravitate towards areas where liquidity is the highest. Currently, right now, very few people have stops up here, which means the liquidity above here is not yet that high. There is still some left from earlier on in the cycle, but it's not that high. This area is going to be quite high, because if you longed from here, you have to ask yourself that question. There were people, of course, that had been buying around here. They kept raising their stop loss, right? They kept raising it. Then they would have kept it under the range lows over there. Then they would have kept it under there. Following this big move that we've just had, that would be their most obvious place to place their stop losses, which means that's where the liquidity lies. You can see I wrote there stops from 16K buys, and it's a very sensible place to put your stop loss, because it lines up with all the different moving averages, the EMAs. You have the 21, the 50, and the 200 EMA. You don't really want to see, after big move, price come back below all of those. Price would then also come into this support zone, as well as this area, which is this order block on the left-hand side. Therefore, that's a sensible place. Had I longed from 16K, which I didn't, full disclosure, I would also place my stop loss over here in this region. I longed from this region over here, so I actually have my stop loss even higher, because I want to bank some of the profits. And that level that I'm looking at, so as shown over here from the tweet that I gave, is going to be the mid-range. The mid-range is kind of what I'm watching. I actually don't even want to see this trend line break down. If this recent low that we've just printed, So I'll zoom in. This recent low that we've just printed at 23,377. I'm on the hourly chart now. That's a level that I want to see hold if I'm holding longs for maybe a medium time frame swing trade position. If you're in a short time frame trade, you probably should have shorted the seeing, which I outlined on yesterday's show. I showed you what a deviation back into the range on a low time frame would look like and how you would trigger your short entry, and you're looking for your short to basically go all the way down to mid-range. So I want to see this hold. This is for swing traders. I want to see the trend line hold over here. If it does break down, my final area that I'm looking at is going to be the mid-range. That is the last place. And that's why it makes it a bit challenging. It makes it tough. That's why it's always a good idea if you can shave some of your profits when you start to get to FOMO regions, which I'm sure you can all see yesterday was FOMO. Guy arrived at work with a cake. Like, I mean, that's FOMO. That's that's peak euphoria. So you want to take some of those profits just so that you can manage your risk better in case price does come down here, because what may happen is you may sweep below the mid-range and very quickly reclaim that. That would be to reactivate your longs. I would still see that as another higher low on the higher time frame, and therefore that's not necessarily the end of the world. But coming under 21.5, you don't want to come under these regions. Then you're going all the way back down to the range low on the low time frame. That's a tight range low, and if you start to lose that, then on the higher time frame, it's this one. Let's just grab it. This one over here. If you start to lose that, then you have the real potential of coming all the way back down to that 18K region. At this point, bears become euphoric. Bulls start crying. Bears say that we're going to 10K, which could be possible. I mean, this could easily smash through because there's a lot of momentum here, right? People start panic selling out very quickly. So just understand what you're playing with. You're playing with volatile times. The market is highly volatile at the moment. It's a difficult task to navigate. You want to reduce your position size and decrease your leverage in highly volatile markets. If you don't want to get wrecked, reduce your position size and decrease your leverage. I personally don't think you even need to touch leverage. Like, I'm more playing spot positions, even on altcoins. Like, if you have an altcoin, like look at that, Lido, it's moved up 8%. You have 4% on Gala. You have everything is up. This is following a sell-off on Bitcoin. I mean, yesterday these things were up even more. So if you can make, look at that, GNS, what, 95%? What is going on here? Let's quickly look at this. Are you kidding me? What happened on GNS? Oh my goodness. Have you guys seen this? Let me know in the comments. Does anyone know what's going on with GNS? When did this happen? Let me go on the 4-hour chart. Is this right now? Holy cow. Let's go on a 1 hour. This happened. Let's go on a lower time frame. What? This happened right now. Okay. I mean, guys, look at, not financial advice, sir, but maybe you should start to look at GMX and DYDX, because I probably will have to end the stream. I might take a position over here on GMX as well as DYDX, because if Gains just did that, they're one of my sponsors, by the way, so congratulations, sponsor Gains. That is a big move, guys. You might see something similar rotating into, speculators will start to look at other coins that have not yet done that, but are still within the same narrative. That means that DYDX could be the next option. How would we manage our risk on this, though? Let's look at that again. Is that what it's for? Yeah, February the 17th. I mean, that's a little bit dramatic. Let's just be honest. That is a bit dramatic. Okay, I mean, this would be a breakout level over here if you were to find the same thing on GMX, but isn't GMX already listed over there? So what would the hype be around this one? Maybe just a rotational play. You'd need to get above this. Once you get above this, maybe you close even a 15-minute candle above this. But you saw how quickly that happens, right? Like, that's a 15-minute candle. There's zero chance that you could bid that. That is ridiculous. Anyway, cool to catch it live on stream. I think that brings us to the end, guys. Not much else to say. I'm glad that I spotted that. I would say that look at an opportunity. I'll try to help you out. Let me quickly look at this one over here at DYDX. Understand that if you're going to go into DYDX or GMX, as a rotational play, expecting that some of the profits are going to be taken from gains, then that's obviously risky, right? Like there's no guarantee that you're going to see something play out in the same fashion. So same thing, if your invalidation level is going to be below this area over here, which is the high low. So you have a low, higher low, you want to invalidate on DYDX in this region, then understand this is an enormous move, right? Let me just quickly, some people don't know this. I mean, so price would have to move 5.6% against you for you to be incorrect. Now, for the sake of simple math, let's just say it's 5%. For the sake of simple maths, let's say you want to risk 1% of your portfolio or your trade or whatever. You want to risk 1%. You can't put your whole portfolio in there. That means you're going to, if you invalidate it, you've just lost 5.6% of your whole portfolio. You need to go 1/5 of that to risk 1%. And you don't want to risk 1% of your whole portfolio. You want to risk 1% of your trading account. Does that make sense? So if your trading account is $10,000, then 1% would be $100. Therefore, you need to work out if price moves 5% against you, what would equal a loss of $100. That's how you work it out. Does that make sense? Anyways, I think that brings us to the end. Please do me a solid favor, give the video a like, hit the bell notification, and also subscribe to the channel. We are one of the fastest growing channels, and your support and help is much appreciated. In the final bit of admin over here, the Rolex competition is still going on. Nobody has claimed the Rolex yet. I don't understand why. I mean, the accounts are right there. We give it live on the stream. Sign up to ByBit. You can get up to $30,000 in sign-up bonuses on your new trading account if you use that link. Also, it gets you access into the Rolex competition. The same is true for Bitget over here. You get up to $8,000 sign-up on your Bitget trading account. They have a lot of unique features. And oh yes, one more very important thing. Join the Discord. You have to join the Discord as well. Look at this. So much alpha trades dropped in over here. This was yesterday at 8:34 p.m. A short on Phantom. A short setup on Phantom. Beautiful trade setup. You got everything you need over there with your stop loss, your TPs. We hold your hand here, sir. We hold your hand, and ma'am. That's it from me, folks. I'll see you all on the next video. Have an absolutely stellar weekend. One more thing before I go off. One more thing. I wouldn't be surprised if Bitcoin does consolidate, that this weekend you see a major altcoin run. Please keep your eyes on the altcoins and be very careful with them. Liquidity is low, and FOMO, retail participants will usually make those trades on the weekend while they're sitting at home. And they catch up after their work week, realizing that they missed out on a lot of opportunity. So just be careful on those long trades, because come Monday, they could quite easily be faded. That's it, guys. I will see you all on Monday. Cheers for now.